Assalamualaikum and hello everyone who's watching this video. My name is Nurin Shafeenaz binti Yusuf Azhari from BA111 Faculty of Business and Management. Today, we are going to look at Malaysia's trade performance from 2020 to 2025. This period reflects significant global and domestic developments, shaping how Malaysia responded to economic disruptions, strengthened its recovery, and advanced its position in international trade. So let's take a look at how these 6 years unfolded and what they reveal about the nation's economic trajectory. Using official data from Malaysia External Trade Development Corporation, MATRAD, and Ministry of International Trade and Industry, MITI, I will examine the key movements in exports, imports, major sectors, and Malaysia's biggest trading partners. We will also explore how trade patterns shifted during these 6 years and what they reveal about Malaysia's economic direction. So now, let's begin by looking at Malaysia's overall trade performance in 2020 to 2025. Based on the export and import graph, exports rise consistently across the years, with clear growth from 2020 to 2025 and stronger, more stable performance in 2024 and 2025. And imports graph show a similar upward trend, steadily improving each year, with 2024 and 2025 reaching the highest import levels. Malaysia's monthly trade balance shows regular fluctuation but generally trends upward over the years, with 2024 to 2025 maintaining consistently higher surpluses than earlier years. For overall performance, in 2020, total trade declined due to the global impact of COVID-19, supply chain disruptions, and reduced international demand. From 2021 onward, Malaysia experienced a strong recovery as global markets reopened and demand for key products, especially electrical and electronics goods, began to rise. This positive momentum continued through 2022 and 2023. By 2024 and 2025, Malaysia's trade performance stabilized, supported by improved supply chains, stronger regional partnerships, and steady export demand. Now, let's analyze domestic exports and re-exports from 2020 to 2025. Domestic exports remain the main contributor to Malaysia's export performance. They showed steady growth throughout the years, supported by strong industries such as electrical and electronics, petroleum products, chemicals, and palm oil. Re-exports fluctuated more as they depend on shipping activity and Malaysia's role as a regional logistics hub. While re-exports increased during certain periods, they did not grow as consistently as domestic exports. Overall, domestic exports expanded faster and more reliably, proving that Malaysia remains a producer-driven, exporting nation rather than just a transshipment or re-export hub. Next, let's focus on Malaysia's import by end use from 2020 to 2025. The graph shows that intermediate goods form the largest category of imports every year. The graph for intermediate goods remains significantly higher than capital goods and consumption goods. This indicates that Malaysian industries rely heavily on imported raw materials and components to support manufacturing activities. The graph also shows gradual increases in capital goods, especially between 2023 and 2025, highlighting growing investments in machines and industrial equipment. Consumption goods also rise modestly on the graph, reflecting increased household demand. After analyzing, the major sectors that contribute to Malaysia's import include electrical and electronic, E&E, and also petroleum and gas. Now, let's examine Malaysia's major export sector in 2025 from January to September and their contribution to GDP. The graph clearly shows the electrical and electronic E&E sector dominating Malaysia's exports. Its bar is significantly higher than all other sectors, where it reaches above 400 billion ringgit. This indicates that E&E remains the core driver of Malaysia's export economy. The other bar on the graph shows moderate but steady contributions. The graph confirms that Malaysia's export strength lies in advanced manufacturing combined with key commodity industries. It contributes to Malaysia's GDP because it can increase national income and help to stable GDP growth for Malaysia. Turning to Malaysia's major import by sector in 2025. The import graph shows that E&E components form the highest import category, with its bar towering above the others. This reflects Malaysia's dependence on imported technical components for assembly and manufacturing. The next highest bars represent machinery and chemicals, which align with Malaysia's strong industrial and manufacturing base. Mineral fuels and petroleum-related imports also appear prominently. These imports shape the Malaysian economy by supporting industrial production and enabling the manufacturing sector to operate efficiently. Next, let's focus on Malaysia's major export destination in 2025. The bar graph shows that Singapore and the United States are at the top with the highest exports, followed by People's Republic of China, Hong Kong Special Administrative Region, and Taiwan. These relationships shape Malaysia's trade policies because the country prioritizes agreements and regulations that ensure smooth market access to these key partners. Now, let's take a look at Malaysia's major import sources in the year 2025. The graph shows that People's Republic of China is Malaysia's largest import source, with 250 billion ringgit, which is the highest bar among all the countries. Singapore follows, closely reflecting its role as a key re-export hub. Other countries also show large import bars, indicating that Malaysia relies on this technologically advanced nation for machinery, electronics, and chemical inputs. These import relationships impact local industries by giving them access to advanced technology and essential components needed for production. Continue with analyzing Malaysia's trade relations with Free Trade Agreement (FTA) countries within Asia. The latest trade with Asia, which is in August 2025, comprising 25.7% of Malaysia's total trade, edged down, which is decreased to 0.2% by 63.44 billion ringgit. However, Malaysia's exports to Asia actually increased because more electrical and electronic products were sold. Malaysia sold more goods to Singapore, Thailand, Vietnam, Brunei, Cambodia, Myanmar, and Laos PDR. But exports to Indonesia and the Philippines dropped. The biggest increases came from Singapore, Thailand, and Vietnam. The trend shows that Malaysia's export sector is still performing well despite weaker imports and slower trade growth. The graph shows the data exported by state in the year 2024. It shows Penang or Pulau Pinang as the highest exporting state, which is over 40 billion ringgit due to its strong electrical and electronic manufacturing base. The other states also contribute by exporting based on its own industrial strengths, where Johor contributes in machinery and food manufacturing, Selangor due to its diverse industrial sectors, and Sarawak contributes in petroleum. Over the next 5 years, Malaysia's trade performance is expected to strengthen further. With E&E exports hitting record highs in 2025, Malaysia is set to deepen its role in the global semiconductor and electronics supply chain. Trade with Asia, China, Taiwan, and South Korea will continue to expand, supported by stronger free trade agreements and regional supply chain integration. Imports of machinery and advanced components are likely to rise as Malaysian industries upgrade into higher value production. This signals continued technological advancement in manufacturing. While global uncertainties and price fluctuations may pose risks, Malaysia's 66 consecutive months of trade surplus show strong resilience. Overall, the forecast is positive, where Malaysia can expect steady export growth, higher technological upgrading, and stronger regional trade connectivity through 2030. To strengthen Malaysia's trade performance in the years ahead, several recommendations should be emphasized. Malaysia must diversify its export sectors so that economic growth does not rely too heavily on the electrical and electronic industry. Moreover, Malaysia should adopt Industry 4.0 to boost productivity and reduce long-term costs, and also improving port facilities, especially in Sabah, Sarawak, Klang, and Penang, will ensure faster and more efficient export and import flows. To conclude, Malaysia's trade performance from 2020 to 2025 is strengthening year by year and moving confidently toward becoming even more competitive in global and regional markets.